Hello, everyone, and welcome back to another episode. I'm your host, the Millennial Investor, and in today's episodes, we're going over one of my three companies that just raised their dividend a whopping 10%, and that company is Procter and Gamble. I'm going to go over in this video why this is significant for dividend growth investors such as myself, and how this will relate to my investing strategy moving forward with the company, but my portfolio as a whole. The second piece of news that we'll be going over in this video is the infrastructure bill. Biden requests a $715 billion budget from the Pentagon, and this also displays their defense spending. Now, one of my major investments in my portfolio, one of the largest investments that I've had in 2020, one that I've especially been investing in over the past 6 months or so, is Lockheed Martin. I'm going to go over the defense spending that they just announced here in the last couple of weeks and how this will relate to Lockheed Martin. And I think that this is just more bullish news. I've been talking about why I'm so bullish on the company, and I think they're going to do great moving forward. And this is just all the more reason why I'll be investing in their company and may even look at increasing my investment here in 2021. And after that's all said and done, we'll move on to the last piece of news. And this also relates to the infrastructure bill. I want to talk about Caterpillar because Caterpillar stock has had a massive uproar. I bought this stock like crazy back in early and middle, like the summer of 2020. And now going into the middle of 2021, this stock is now pretty much like double from where we originally bought it at. And I want to talk about how this relates to the company moving forward. We had JP Morgan just announce a new price target, moving it upwards way up from $205 all the way up to $237. So I want to talk about how is this changing my investment with Caterpillar and what my plans are moving forward. Do I want to sell it? Do I want to increase my position on it? Will I just be holding? We're going to go over all that in the video. But before we jump into that, guys, like I said, I always mention at the beginning of the video, if you're not familiar with me, I track my annual and monthly dividend income through these two charts right here, as well as my portfolio value and my monthly YouTube income, as well as these are my 5 investing goals for 2021 and my 2021 stock market prediction. But if we go over here and we go to my portfolio, we currently are sitting at right at about $12,500. We're about a break-even day today. We're down a whopping $5. And if we go over here, before we jump into those three topics that I just mentioned, if you want to get signed up with M1 Finance, a lot of people have used my sign up link, 105 to be exact. So if you want to use that sign up link, you can get $30 just for getting signed up. This link is down below in the description. If you just download, deposit $100, you get a free $30. So go ahead and get signed up and get that free $30. Go ahead and claim it. It's yours. All you got to do is just take a couple minutes out of your time, and you can help support the channel as well. But let's go ahead and get into one of the main pieces of news that we were talking about today, which is Procter and Gamble. We'll go ahead and start off with the news of Procter and Gamble, and it currently makes up about 5% of my portfolio. Now with Procter and Gamble, it is one that I've been buying a lot over the last year and a half since starting this channel. I started my channel back in mid to early 2020, and you see right around the time of the pandemic, let's look at the 2-year chart, right around these levels, right around the 110, the 120 range is when I was really buying this company heavily. And I bought it all along the way, even upwards of $140 a share. And now with this company starting to flatten out a little bit and starting to trade sideways, it now has a dividend yield of 2.3%. Now that doesn't factor in the raise that was just announced yesterday of raising this dividend 10%. Because let's look at the 5-year chart here, and you see these little letter D's at the bottom. You see that this company has a history of usually raising that dividend a very conservative level, usually in the range of something like 3 to 6%, right? So it went from 67 cents, and then they raised it in 2017 to 69, and then in 2018 they raised it to 72, and then in 2019 they raised it to 75, 2020 they raised it to 79, so about a 4 or 5% raise, and now they're raising it 10% from the previous payment of 79 cents up to 87 cents. That is a big upwards move there. And now the forward yield, if you factor in the new dividend raise, is almost 2.6%. So that is a pretty good yield for a very defensive, very safe stock. And this is why I like investing in long-term dividend stocks like a Procter and Gamble. This is one of my core holdings and one of the stocks that I like to consider being one of my forever stocks. If we go to my list here, you'll notice that of all 22 of these companies, some of them I've had since day one, and some of them I intend on never selling. And there's a few on that list, and I'll go ahead and mention some of them. One of them is Coca-Cola. I never plan on selling it. Another one is McDonald's. I never plan on selling it. Kimberly-Clark, never going to sell it. Johnson & Johnson, never going to sell it. 3M, Procter & Gamble, Pepsi. A lot of these companies I never plan on selling, and Procter & Gamble is one of those because they have such basic take advantage products that people buy from their household every single day. They have many compelling brands, and it is one that I just see is going to be successful. They produce so much cash flow. They have so many billions of dollars on hand, and that pretty much no matter what recession happens over the next 10, 20, 30 years, I think that Procter and Gamble is going to be extremely profitable. They have a great balance sheet, they have even better cash flows, and with their massive array of portfolio of brands, I think that this company is going to be successful. So this is why me as a dividend investor, I get really excited, because not only have I seen pretty decent returns, let's go ahead and go back here and let's look at M1 Finance and let's look at my average share price. I own this company at 132. I used to own it at a lot lower price, but unfortunately the stock has traded down recently. But if we look at this 5-year chart, it has went straight up. It has gradually uptrended and it's pretty much doubled in price over the last 5 years. Now, I own it slightly lower than the price today, even factoring in the down day today, but I think in the long run, my share price gains will be big. My dividend yield on cost will be massive for this company over the next 5-10 years. So that's why I'm owning Procter and Gamble. That's why it's great news for me as an investor to see this type of news happen for Procter and Gamble, a 10% raise, which was much more bullish than anything I would have expected. And I think 5 years from now, I think buying the stock at 135, I think you'll be begging to buy it at that price. I think in 5 years from now, I think this will be a $200+ stock. But let's go ahead and move forward and let's talk about the infrastructure bill for a little bit, because the infrastructure bill has lots of information behind it. And I'm not going to try to break down what all the infrastructure bill brings. This is not a political debate whatsoever. It's not about are you for or against it, but it is potentially looking like it is going to pass. So if that passes, this will be big for Lockheed Martin and Caterpillar, which are two stocks that I own. Now, what I want to do is I want to scroll down here and I want to highlight this paragraph. Washington, U.S. President Joe Biden's fiscal 2022 budget request asks for $753 billion in national security funding, an increase of 1.6% that includes $715 billion for the Defense Department. Now, basically, national security funding is going to go up about 1.6%, a 1 or 2% increase from the previous year. Now, here's why that's big, is because people are worried that the Democrats are not going to be funding defense spending like the Republicans did. Now, I don't care. I'm not going to speculate. I don't care what they do. But this just shows one more reason why I think my investment in Lockheed Martin over the past year is going to be a successful one. Let's look at the 2-year chart. This company dipped massively in early 2020 from the pandemic when everything shut down, but when everything started to recover through the back half of 2020, Lockheed Martin downtrended, and that was because of political worries. Now, if we look at the year chart, I started buying this heavily in the 340s, the 330s, and really heavily in the 320s. At one point, this stock actually dipped down to 300 and teens. It was like 318 or something like that. But anyways, I started buying the stock like crazy because the dividend yield was massive, the dividend growth was massive, and the profitability of this company is, once again, absolutely massive. The products that Lockheed Martin makes cannot be replaced by a competitor, and they have the #1 customer in the world, and that's the United States government. Now, people are worried about the Democrats not spending enough on defense like the Republicans did. And this just goes to show why these worries are unjustified. Because like this paragraph said, they're looking at increasing in national security funding by 1.6%, and of that $715 billion for the Defense Department. This just shows one more reason why Lockheed Martin will be just fine no matter who's president, no matter what political parties are in power. And another thing I wanted to mention for this company of Lockheed Martin is that they have a balance sheet that is a fortress, and they more importantly have a backlog of orders that is in the billions and billions of dollars. So no matter what happens with the defense spending budget, even if it were to go down 10% next year, 20% next year, would that hurt Lockheed Martin? Yeah. But would it really hurt them in a major way? Not really, because this company has such a major backlog of orders, they have such a massive amount of profitability, and they also just announced another partnership as well. They just announced that they are going to be buying out, ticker symbol AJRD, Aerojet Rocketdyne. Aerojet Rocketdyne is a space exploration company, and they have one of the biggest contracts ever with NASA. You see this massive jump up here where it was $42 a share, and then next day it closed at $52, about a $10 upwards move. So what is that? That's like a 20-something% gain. That is because Aerojet Rocketdyne just found out that they're currently looking at being bought out by Lockheed Martin. And Lockheed Martin is always looking for competitive acquisitions to make their company just that more dominant. And I think Aerojet Rocketdyne, a very profitable, growing space exploration company with a massive footprint in NASA, I think is a perfect acquisition for a company like Lockheed Martin that will put a lot of their cash on the side to work, will just make the company just grow that much more on both a revenue and profitability side. And one of the best things I love about this company is not only the dividend yield and the dividend growth, but it's the payout ratio. Let's look at the 5-year chart in M1 Finance for Lockheed Martin. In 2016, they paid out $1.65. They kept on paying that, and then in 2016, and at the end of 2016, they raised it $1.82. Okay, we get to the end of 2017, they raised it to $2. We get to the end of 2018, they raised it to $2.20, and exactly a 10% raise. In 2019, they raised it to $2.40. What is that, about a 9 point something percent raise? They raised it to $2.60 in 2020, another 9+% raise, and they're looking at raising it double digits or high single digits again here in 2021, at the back half of 2021. And so as this company has continued to raise that dividend massively, you're looking at a 5-year upwards move in the dividend payment of, let's look. It pays $2.60 now. It paid $1.65 in 2016. So let's go ahead and take that $2.60 divided by 1.65. In the last 5 years, they've raised that dividend 57.5%. A massive raise in just the last 5 years. And not to mention, in that time, this company has also had, what is that, about a 50% upwards move in share price as well. And that doesn't even factor in that it used to be a lot higher in share price. And this company only pays out about a third of its profits in the form of dividends. About 60 to 70%, depending on the year that it's in, of this company is reinvesting back into its business. So while it has a great yield, a growing dividend payment, the vast majority of its profits isn't even paid out in dividends. They still are reinvesting back into their business in a major way, and this gets me really excited for Lockheed Martin. So as the infrastructure bill is looking at passing, I think that it doesn't really matter whether or not this goes through. This just replicates another reason why I think Lockheed Martin is going to be a fantastic purchase in 2021 and beyond. So let's go ahead and close that, and let's go to the last piece of news, and this also relates to the infrastructure bill. And I want to go to this paragraph real quick, and I want to just read it off because this was issued by JP Morgan just the other day, and it says, "We are raising our Caterpillar estimates on improving equipment fundamentals, particularly in construction, mining, and energy. We view the unprecedented winter storm in Texas as a catalyst for near-term construction and backup power equipment demand, or until initially sales thereafter, while also strengthening bipartisan support for a broad-based national infrastructure package. Additionally, U.S. oil and gas production is likely to accelerate, albeit off of a relatively low base. Separately, we believe that mining capex is entered in a sustained demand-driven upcycle as hard commodity prices continue to rally and equipment replacement is likely to continue to accelerate. We raise our December 2021 price target to $237 from previously $205. So Caterpillar is getting a massive upwards reward there from JP Morgan Chase. And let's go ahead and look at that price. They said the price target for next year is $237, which is almost flat from today. That's about a 2 or 3% move upwards. But previously, they were only projecting this company to be at $205. And when I started buying this company heavily last year, once again, this was about $100 a share, $110. When I started buying this company like crazy, this represented my value for the company. I really was bullish on this company at 110, 100, 105, but now as it starts to get upwards of $200+ a share, I think that the company has ran a lot, but they have a lot of opportunity ahead. And this is why great dividend winners like this, if the company just goes up massively in price, I'll just hold it. And my plans with Caterpillar is to do just that. I'm not going to be increasing my position with the infrastructure bill. I have already seen massive returns, and a lot of the gains from that infrastructure bill is already priced in, unfortunately. If there wasn't an infrastructure bill, I believe that this company would be under $200 a share, and I kind of wish that this company would go back down in price, so that way it would be more of an attractive buy. Because at these levels, you see that the dividend, let's look, it pays $1.03 a share. So annualized, you take $1.03, multiply that times 4, and what you get is that you get $4.12 every single year in dividends per share what this company will pay you. So you take $4.12 and you divide by today's current price of $232 a share, and you will get a dividend yield of about 1.77. Not very high. So to buy this company, the dividend yield is less than 2%, but I do believe that that will not be around for long. The good news is that with the infrastructure bill passing, is that this is what's great about dividend stocks. Usually when dividend stocks like a Caterpillar go up massively in price, that usually means that the business model is going to be having some type of positive move towards it. And this is exactly the case with Caterpillar. But the good news is with this company moving upwards in price, that usually means, since the business is going to be doing better, that means that the dividend raise is usually going to be massive over the next 1, 2, 3, 4, 5 years. And I think when we get to July, I believe that's the month, is that what every year that it raises its dividend? Yeah, in July of every year is when this company raises its dividend. And so in July of 2021, I'm expecting a 10+% dividend raise. You heard it here first. I believe that this company is going to announce a dividend raise of probably 10% plus if that company indeed get the infrastructure bill that it needs. If it gets that, do not be surprised, especially also not to mention not just in 2021, but especially 2022. After the infrastructure bill is implemented and this profitability really starts to come for this company in a massive way, expect 2022 and maybe even 2023 to be big dividend raises as well, because this company is really conservative with its dividend raises and is always being conservative in case of a recession. But now that that has not played out, now that the recession is not here and it's pretty much over, the Rona is gone, right? And the infrastructure bill is looking at passing. I think that this company is financially prepared for anything that can be thrown at it. And right now, what's being thrown at it is good news. So if that's the case, I think that this company is going to be raising its dividend over the next 5 years, probably at least 50%. I'm going to go ahead and say that there. But those are the three pieces of news that are really important for my stock. So just to reiterate, to go over again once more, we have Procter and Gamble. Procter and Gamble is a safe conservative stock. That's one of my core holdings. And even though it's a boring old grandpa stock, this just shows why it's great to invest in. It raised its dividend in the double digits, almost exactly 10%. It is a great defensive stock that I'll look at holding for the long term. Lockheed Martin, one that while I was very bullish, many people were very pessimistic in 2020, and now in 2021, I think they're regretting it. It is now almost $400 a share, and the last 3 months of this company has been pretty much nothing but green days. And as this company gets more funding from the government, even with the Democrats in office, I think that this company will have massive moves upwards in two things, in the dividend payment and in the share price. But for me, I'm so bullish on this company. If it were to go to $500 a share tomorrow, I'm not selling a single dime. And then last but not least, we have Caterpillar. Caterpillar is a stock that is also benefiting massively from the infrastructure bill, and regardless of whether or not it happens, even if it gets shot in the dirt, if the infrastructure bill never happens, I think that Caterpillar is still going to be an amazing investment, and that's why I'm betting on it long term, and that's why I continue to hold my shares pretty much no matter what happens, because I'm so bullish on this company. And if that passes, I'm expecting massive dividend raises for the next 1 to 5 years. But thank you guys so much for watching. I appreciate for watching all the way to the end. Like I said, if you want to invest in my portfolio yourself and you want to see my pie firsthand, go ahead and check out this link that is down below in the description. It's right here, so if you want to invest in yourself. And there's lots of other things to check out as well, including mentoring calls, Yada savings accounts, credit card referrals, and most importantly, to get signed up with One Finance, because you get $30 for getting signed up. But thank you guys so much for watching, and I'll catch you guys next time.